What is up, everybody? Logan here again with another video coming right at you. And let's talk about today's market. I hope you guys are having a fantastic day. Make sure to leave a like on this video if you guys would like more content like this. But today really didn't teach us anything about the markets. There's a couple things I want to go over, but it really wasn't a bullish or bearish day. I initially told the Discord, I said, hey, it's a good close for us down at the lows of the day. And then I looked back and the last 5 minute candle ended up ripping like 6 points, ending us completely neutral on the day about where we closed on Friday. As you guys can see, around here on SPX. So just a very neutral day. So this really didn't tell us anything. Now let's run through a couple scenarios because we've been chatting on the video that I released last night and looking at my 195 chart. Move my face cam up a little bit. Now we bounced pretty nicely off this little gap up level right before that meeting around 46.30. We found really nice support and we've been running up since then. But what we're seeing here is we still have that downtrend that I was talking about the other day because this candle in the short term, now we're still in a bullish market. Looking at this, it's 100% bullish still, right? But looking at what we've had for other Opex weeks, right? We've been mentioning Opex week quite a bit. We had Opex week back here. We also had it back here. And it's starting to look kind of similar. I'm seeing a lot of the same kind of candle patterns where we have very indecisive days right around the moving averages. Now, these days were a little tighter to them, especially back here, right, where we're actually touching and touching and touching, then boom, break through. And if I could go back further, but this is the 90-day chart, of course. So we're still up in the nosebleeds. It's not as crazy as it was, right? We've these charts were up here. They've kind of equaled themselves out down here, put the mean right around 45.77 now, which I really do like that spot for the mean of where SPX should be trading. But yeah, today, I mean, the RSI is straight sideways on this chart, and we did not get anything to help confirm or deny if we're bullish or bearish here, especially since it's the first day of OPEC, or the first day in the Opex week, right? Where we have all those options expiring Friday for the monthly expirations. So let's zoom out. I just want to show you guys this real quick. But yeah, this, I mean, I could draw a downtrend, right? Boom, short term. So what I kind of see, which we've talked about, is all-time high, lower, low, right? Like we're heading lower. We try to come back to all-time highs. We don't get it. We come back down to test, right back around 46.30. And then ultimately my price target's 46.06 for the week. And I'll show you guys, because of my daily chart, the TTM squeeze is still losing momentum on a day we're completely flat. So that's really interesting. A little bit of divergence here. And then the RSI, of course, is completely flat on days like today, right? Because we haven't gone up or down. It's as flat as we can be. Now, if we zoom in, around 46.60 is where the 10 EMA is. So I'm going to be watching that closest. See how we react around there. And then the 21 day is right around 46.09 right now. So 46.06 was my price target as of yesterday, but after today, it seems the moving averages continue to rise. And then we also can come all the way down here and look at, 44.60 where the 89 day is. But I'm more of a fan of using the 20 day around this time. If we are to break the 21, that's when I go into trading view. I look at the 50 day as well. I just don't have that on my charts right here. But we've traded really well in this bullish pattern. Do we just re-ride the 10 up, retest all-time highs? It's a possibility, but I think more than likely due to the historic nature of Opex, and I'll pull up a chart towards the end on Opex week and how we react. But let's go check Tesla now, right? Because I mentioned Tesla yesterday. Now it did start, it was really weak at one point. It was down 5%. I think the lowest I saw it was 981. I think was the low of the day. I could be wrong. It could have gotten lower. Okay, yeah, there it goes. So the candlestick says the low is 978. And then, we're the 10 and the 21 are looking like they want to cross here. So we got to be very careful if you're in Tesla. And the RSI was poking red earlier until we got that nice bounce here. This is actually kind of a strong candle. When you see candles like this, it's just showing that there's strong support. We bounced off of it. People started buying it up. but you got to look at the overall trend. The overall trend of Tesla on this side is down, right? I mean, you could draw a perfectly straight line. So it depends on what tomorrow brings, but with the TTM squeeze still sloping down aggressively, I mean, Tesla did still close down 2% today. And the RSI poking red on the daily chart, it's definitely not looking the best. And if we zoom out, at least for the bulls, right? If we zoom out, I mean, you guys could see that in my other shorter term time frames, you guys can see some TTM squeezes in here as well, which are really fun to use on the shorter term time frames. But if we look at Tesla in general, you know, we're right back to the mean on the 195, but it did tell us when we were up in the nosebleeds and a good time to get long. You know, math's a really cool thing. I'll say that every video, but the daily will always trump any of the other time frames. But I still like to use these three, right? These are the big rivers that these little streams and currents are flowing in. So these can help you make decisions, but you know, it's really easy to tell like, hey, we're up in the nosebleeds, 1.5 standard deviations from the mean. And when you're 1 standard deviation away from the mean on the daily chart, you generally go back to correct fairly quickly. We'll take a look at NVIDIA now that we have Tesla out of the way. NVIDIA is actually only down 1%, but they were down about 5%. They came down to test the 10 EMA today. So they officially tested that earlier, or maybe they were like $1 off, but basically right there. But what you guys got to remember is we have earnings this week on NVIDIA, and they're coming out Wednesday at 4 p.m. So right after the market closes on Wednesday. What do they do from here? If I zoom out, we can look at their TTM squeeze. The RSI is still losing momentum, but the TTM squeeze is just kind of holding up very steady. It almost looks like this could be bull flagging, but earnings, even though they're most likely going to announce really solid earnings like they always do, I don't know. This is quite the run up into earnings. And we know historically you sell the earnings if you run into earnings, right? So that's NVIDIA. I still like NVIDIA as a stock, but I just think right now it's still overextended. We look how far we are from the mean. I mean, it's kind of ridiculous over this on the daily right now. So still a red day for it, but only down 1%. Nothing too crazy. Just a nice little bounce right off the 10. Now let's go check out Dow. I think the Dow is one of the weaker stocks right now. And we can do that by searching DIA. The Dow actually had a better bounce into close, but was closing around the lows of the day, right around 360.80 before it bounced quite a bit into close, which is really interesting to see. But like I said, just like we really don't have any help from this indicator, right? I mean, looking at my 195s, is there a candlestick that looks just like this? I mean, maybe right here. But like I said, I don't think we're going to just gap down like it's nothing tomorrow. But seeing the RSI coming closer to poking red here is definitely a little more concerning for me. We did get almost 2 standard deviations away from the mean on the 195 chart. That's generally a good indication to switch to the other side. And this called like the literal bottom of DIA through September. So remember, everybody and their mom was buying puts, and I said, hold up, if you buy puts, you're going to lose money here. You know, and I'm still messing with a couple positions that I have on that are looking a little rough. And then I did just add a new Amazon position today. So we'll take a look at Amazon. But this is the Dow, right? And just looking at the moving averages right here, you know, there's a pretty strong support, but I would like to see DIA come back and test this old high, you know, right around 356, which ironically is right around here too, before it decides to head back up. So I still think there's more downside, and Opex is the perfect week to lead us into this. And let's look at the daily on the Dow as well. Zoom out real quick. You guys can see the the TTM squeeze is still negatively sloping. And then if we zoom into the actual charts here, basically, you know, 360.8 was the 10-day. We bounced off of that. Pretty healthy bounce too coming into close. But anytime you see red candles and you close at the low and it's right on the 10-day, there's a good chance that any sort of selling pressure could trigger you to come down to the 21-day, which would be at 358.36. That would just be a nice healthy pullback for the Dow, I think. You know, there's nothing really too hard to think about there. You guys can see the TTM squeeze is still losing momentum. So today was just neutral. Didn't really tell us much in general. We can even look at RUT. Whoops, not Roy. RUT. Oh, RUT T. No, there we go. So the Russell 2000, the small caps are actually down 0.5% today. They also came down to basically test their 10-day. They broke through it and then still closed above it, which is actually a little healthier. But I would like to see them come down and test their 21 as well, which, I think we could get through Opex. But I mean, that would be a 2.5% move from the Russell to get down to that. The RSI is still on its way down. The TTM squeeze slightly losing momentum, but not too crazily. And then we'll check Amazon and then maybe one more stock right before I hop out of here. But Amazon's really not showing us too much. I actually took some call credit spreads on them today. I'm more contrarian with my trades, even though there's a really nice amount of support below us with Opex this week. I'd much rather be on the call credit side just from the historical price action that we see. And then another thing that I saw over here was like, this would be kind of ridiculous if Amazon's to break out over 360 or 3680 this week. I mean, it's the 2.5 standard deviations away from the mean on the 195, and it usually chops in this range. The highest we did see it go is back here, which in this downtrend was 2 standard deviations away from the mean. And then we did get down to here, 3175. I remember playing, I was in Amazon a little bit through this and was able to get out a couple weeks ago. And then I just added a new position on them today. So playing it smaller, just throwing something on, seeing if we can get this right. But even with, their earnings report and then running up after earnings, I still think there's a lot of chop in here. And, November is historically Amazon's best month. I wouldn't take this position any other week except Opex week that I took today. So that's what I see here. And then almost every other time frame is confirming it. I mean, it also shows over here, it's been stuck in this like perfect on the hourly chart, just right in between these levels for the last 30 days. So I could expect 3640 this week, but anything higher would be kind of nuts in my opinion. And then also, 1 standard deviation away from the 4-hour chart puts me at 3660. So that's just Amazon. It's everything I'm looking at. And then I'm actually going to look at BIB. So biotech's been a little interesting lately. BIB closed around 272. It's been stuck in this downtrend for quite a while, but if you guys want to see something really interesting, BIB's actually squeezing. The last time it squeezed, it was positive momentum into negative, and we just saw womp, 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 big gap down, and then it's been riding this moving average until today where, well, actually last week, we saw the RSI poke positive for a little bit, but we could not get that break of 285, which is kind of in line with where it chopped back here. We fell back down, retested this 1 standard deviation away from the mean to the downside, have seen positive momentum, even though they've closed red. So I think over the next couple of days with this squeeze building, we should see at least 5 more days of this squeeze if we look at back here before it decided to make its move. But if we don't see that, right, I mean, I think we could squeeze this. The momentum is shifting to positive, and it could definitely push us up to about 295 right here at the 89 day. So we had the moving averages cross back here. It's been pretty ugly since then. They have not been able to regain any traction, but I think they're about to. So that's BIB. But that's going to be everything for me, guys. I hope this technical analysis helps you out. If there's any stocks you want me to check on, leave that down in the comments below. But that's going to be everything for me. I really appreciate all the support. Make sure to leave a like. We also have a Discord if you guys want to come trade with us. I know we've been doing a lot of 0 DTEs, and then I have a couple swing trades I like to place here and there, but I love trading. It's super fun. So that's going to be everything for me. I hope you guys enjoyed this video, and I will see you guys soon.